Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at a technical analysis on the currency pair USD CHF. And first, we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we're seeing on the chart. Now, we can see that USD CHF pace bounced up an intraday low near the 0.8950 as US retail sales debt ceiling negotiations loom. USD CHF retreats from intraday high, stays defensive after reversing from a 2-week top from the previous day, while market sentiment suggests a sluggish traders waits the US debt ceiling talks and retail sales data news event. And recently, a downbeat US data mixed Fed's peak favors Swiss franc bias. And we can see that USD CHF remains pressured near the 0.8950 and prints a minor losses while reversing from the intraday high during a 2-day downtrend to early Tuesday. In doing so, the Swiss franc cheers the US dollar's weak performance and the market's cautious mood ahead of the key data and events that said that the US dollar index DXY drops to 102.40 as it defends the weak start pullback from the monthly high. With this, the greenbacks gauge versus 6 major currency bears the burden of the softer US data and mixed Federal Reserve commentary, even as challenges to sentiment put a floor under the DXY, of course. Now, what to expect from this on Monday's NY Empire State Manufacturing Index for May marked the biggest fall since April 2020 to minus 31.8 for May. The same journal as the downbeat signals from the US inflation numbers flashed the last week, as well as justifying Federal Reserve dovish hike to weigh on the US dollar and the US CHF price. However, the Fed policymakers remain mostly hawkish despite not suggesting more rate hikes, which in turn puts a floor under the US CHF. And on Monday, the Federal Reserve signals have been mostly upbeat as Atlanta Fed President Raphael Bostic told CNBC on Monday that there is still a long distance to go on inflation and added that they may have to go up on rates as reported earlier. So, on contrary to this, we're expecting a technical levels, and despite reversing from a 1-month-old descending resistance line around 0.8985 by the first time, and the USD CHF pairs short-term downside remains elusive unless it breaks the 1-week-old rising support line close to 0.8920 by the first time. Now, on today's daily price, we have it at 0.8951 and a total daily change at minus 0.006. And today's daily change, of course, at minus 0.07. And we have today's daily open at 0.8957. So we have our daily SMA 20 to be at 0.8922 and daily SMA 50 at 0.9062, daily SMA 100 at 0.9161, and daily SMA 200 to be at 0.9412. So what to expect? We are expecting a free fall from the zone down to at least 0.8887, which from that entry point, we're looking at about 37 to 40 pips from that entry point, of course, which is good money. And once we touch this landmark, we might have a little pullback and then result to a new zone at 0.88573, which is about 67 to 70 pips from that point, of course, which is good money. And that's our technical analysis on today's currency pair USD CHF. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at Coca-Cola. And first, we'll be looking at what we've been hearing on the fundamentals aspect. We've seen that Coca-Cola declares $0.46 quarterly dividend with a 2.9% yield. The dividend will be payable from July 3rd, 2023 to stockholders of record on June 16, 2023 with an ex-dividend date of June 15, 2023. Now, the annual yield on the dividend is about 2.9% for dividend history and other dividend-related data on Coca-Cola, of course. Now, what we're expecting is a deep down fusion and expected revenue topped by estimates of 0.03 earnings beat dollars And Butler Coca-Cola HBC expects an annual profit growth to be at the top end forecast. Now, Wednesday saw forecast full year profit growth to be at the top of end of its guidance, aided by a robust demand for its soft drinks and executed price increases. Now, beverage makers have raised prices in line with a rise in energy and commodity prices after Russia's invasion of Ukraine last year. But companies such as the Coca-Cola have witnessed and sustained demand as customers continue to spend on soft drinks, of course, and market shares improved for both non-alcoholic ready-to-drink and sparkling, while we effectively implemented thoughtful price and mix changes in the face of continued cost inflation, as said by CEO Zoran Bogdanovic. Now, in the first quarter ended March 31st, we saw that in value share increased by 70 basis points, while sparkling value share increased by 10 BPS. The company's net sales revenue per case for the quarter grew 21% on an organic basis, while analysts on average expected a 16.7% growth, according to a company compiled consensus. Now, what to expect from this on a technical level? Looking at our charts, we are seeing a bit of a downward zone, looking to build up, but this should not last, predicting the fact that Coca-Cola expects an annual profit growth at top end of the forecast. Now, a short-term sell for at least 63.64, and then a pushback up to a new zone or to touch the latest resistance zone at 64.68, and probably an extension to the 65 zone and axis. And that's our technical analysis on today's commodity, Coca-Cola. I remain your host, Nick. Bye for now.